Welcome to the StockMiner.com studios. I'm Brian Johnson, and a huge march up today by the markets. Got to have a lot of people a little bit befuddled, I must say. We talked yesterday about how the move that we saw was not exactly what I was hoping for. I was hoping for some more confirmation from the bears, but I wasn't really all that stunned by what we saw yesterday. Even maybe expected another update today, but was hoping that some of those overhead levels would hold. None of them did. As a matter of fact, those levels were broken right from the get-go, right at the beginning of the day. The market, not wanting to even mess around at all, gapped up and over these overhead levels that we had been discussing yesterday. This is what I was hoping to see hold. Either a push down today or a hold up here, but the market's gapped up above here. It doesn't illustrate it here on this chart, but they did gap up above these moving averages, and it was nothing but straight up from that point on. We really got even confirmation from the internals today. Was a little bit, well, maybe we'll see some sort of divergences here. Not really. Everything was pretty much confirmed by the big move up. So, as it is now, we can definitely say, buy the dips. Bulls are right back to buying the dips. Bears had an excellent opportunity here to take over, and there's just no interest in doing that yet. News, whatever. You can blame whatever news you want on it. I'm looking at Google Finance right now, and it's talking about how investors relax on Egypt woes and stuff. I don't ever think it was ever part of Egypt, to be quite honest. I don't think this drop had really anything to do with Egypt in the first place. But they've got to have a reason for why the markets go up and down. Today, I guess it was because they're feeling better about Egypt. That usually tells me that they don't even know why. They don't know what the strength is behind the market. Point being, straight up today. So here we are, back up over these levels. Talked about opportunities to maybe take this thing to the long side if you got in, and did get a little bit of that today. Good for you. Great opportunity. Really pretty much ran itself up all day long. It's pretty easy trading if you just went long dang near anything. Except for, of course, the bear ETFs. Those did not do so well. Those did fall today. We'll get to those in a bit. Back above these new levels means what? New highs in the market. So it is what it is. Could this be capitulation? Maybe. Maybe. But we have to take the charts for what they are. And right now, we are back above all these levels. We're back to new highs. That is back to a bullish sentiment once again. Looking at these overhead levels, look at that big, strong push to the upside. Wiping out the red candle we had last Friday in short order. Didn't see much yesterday. Today was the follow-through by the bulls, not the bears. So here we are, back to new overhead highs. Going to start looking now at about 12,100 to 12,200 for the next stop. On the Dow chart. NDX chart also doing well, not quite as well. So you're going to get chatter today about how the NDX didn't confirm and all this other stuff. I'm really not going to be all that concerned about it. However, if you're an Elliottian, this looks like a 1-2. There's that gap I talked about at the beginning of the day. They all show the same thing, and that is up above these moving averages to the upside. I think this is all part of a three-wave up, and I don't think it's done. Looks like there's still more to go. So I would be watching, if you're a Qs player, I'd be watching tomorrow morning to see if any continued strength comes into the markets. And if it does, this is definitely where you're going to want to be looking for a potential long play. I don't think this move is quite done yet. So back up and over that 2330 mark could give you an opportunity to the long side in the Qs. And I certainly don't mind going long the NASDAQ. Don't like going short it. Hoping that the 20-day would hold if you were a bear. Guess what? Gapped up and above it. That's what I was talking about. If you just can't beat it, you gap it. So it gapped today, ran straight up, right back to highs. The best chance you have, if you're bearish on the market, is for this to turn into a consolidation. Chop itself sideways here and maybe eventually resolve itself to the downside. But after today's move, I'm sure a lot of people are going to leave the day feeling very, very bullish and very content with any kind of long position they might have in the markets. From a weekly perspective, too, you can see now that we're 2 days into it, still looking strong again. Let me remind you, last Thursday, this candle before it looked very, very strong, too, and it didn't last long. So let's save our judgment on the weekly for the time being. However, it is what it is, and right now it's just a high base consolidation, and that is still bullish for the markets. Let's see where that closes. Here's the move in the SPX. See the gap? See what it did? Up above the moving averages. This is what I was talking about. Get back into the moving averages. Will they hold? Well, easy way to beat that is just a gap above them. So we started up and over that 1290, 1292 mark, giving opportunities to the long side here. Ran up into 1300, which is where I would have been looking to be very cautious on any kind of long trade, but as it blew through that, it never looked back. Went straight up, finishing around 1308 by the time it's done. And once again, looking like a 1, 2, 3 move. This looks like it's maybe even a consolidation. Could be all part of the three wave with a little bit more left to come. Now I'm looking at 1310 to 1320, and from there 1320 into the 1330 area. So watch for pushes above that 1310 mark tomorrow and see if we get any follow through by the bulls. Okay, here it is on a daily, back up, 2 new highs, back and above, and no problem. Having a really hard time, to be quite honest with you, reconciling all of this. Pushing the new highs as easily as it's done, considering we're up as far and as high as we are, has got to have a lot of people baffled. If they tell you that they're not, I would guess that maybe they're trying to be strong for you. The truth is just the truth. Sometimes the markets do things that even we professional traders have to stand back and go, what? And this is one of those moments. Absolutely. This is one of those moments. So now, once again, 2 new highs, looking for pushes above that 1308 to 1310 mark, and then back into like 13, about every 5 points after that if you want to be cautious, the more cautious. Weekly, talked about this, and this was the one thing I struggled with all weekend long were the weeklies. They just didn't look all that bearish. And so far, they're really not all that bearish. Now, we have not closed the weekly candle out, but as it is right now, it's very strong and looking very good to the upside overall. Already up 2.5%. Really pretty startling at this stage in the game. VIX Daily 2 crashing through the floor, back down 10%. Loved this move. All the way up to 20, and in 2 days, here we go again. All that's happening here is the VIX is clearing way to come screaming back down to lower levels again. The VIX weekly reflecting it as well. See, I wanted to hold above this 20-day or 20-week moving average, and so far that is not being accomplished by the markets. Have to wait and see if this is where it finishes by the end of the week, but right now things don't look and don't feel all that bearish in the markets, and as that happens, the VIX starts to bleed out again as the markets get content with stocks going up. Apple, great day. Started the day on a gap up and ran upwards all day long, finding perfect overhead resistance at the 345 mark. That would have been a perfect overhead target for those of you playing along today. Any further pushes now to the upside, I'm really looking for. I wanted breaks above 345. Remember that? And this is why we closed right at 345. Really like to see some further push by Apple. At this point, it looks like that's very, very plausible. Watch for that tomorrow. So pushes up and over 345. Let's go 345.50, maybe even 346 would still probably net you a buck or two before you'd have to start looking at some overhead resistance and ultimately looking at something up and above this 348, 349 area, and then onwards and upwards for Apple if it manages to get above that. Coming back into and looking at this overhead level. Will it hold this time? We'll see. We got one close above it. The next week we came right back down. Now we're coming back up to test it as we did last week. So we've had really a move up and a break, then a test the following week, then a test the following week, and looks like we could be on task for another test this week as well. Let's see if it doesn't break it and hold above it this time, unlike what we saw last week. We'll see where this closes on Friday. FAS 60-minute. Where was my entry? I've said it a million times, above $30.50. Got that break today, and it was off to the races for the rest of the day. Got a good dollar out of that one if you played along with that one or have been following the videos and marking this stuff in your charts. Above $30.50 to the long side. Now you're up $1 at least in this trade. If you were holding and did hold overnight, okay, why not? Be cautious. Do not lose money on this trade. Make sure your stop is in a place where at least if it pulls back, you still make money. If you want to let it run, that is okay. But don't lose money on the trade. You're $1 into it. No sense in doing that. FAZ 60-minute. Break of 820 took you down to 810. So there was your break. You made maybe 10 cents on the deal. Coming back to retest what? This lower blue line yet again on the 60-minute chart. Bigger picture overall. Potentially further strength in the market means further weakness in the FAZ, and if that's the case, I still got to look at this lower blue line as a potential target. So we could have a little bit more left to go. Below that 820 mark, I said I would not be long. Would definitely be looking to get short below there, and that is your price. If it somehow jumps tomorrow, you're looking at pushes back up and over all these same levels I've been talking about. Right around that $9 area would be the most conservative place to get in, or above the 20-day. Otherwise, look, guys, it's bleeding itself out. You can play the whole this thing's got to turn around sooner or later game with yourself until you're completely out of money. But the truth is, you can't be playing this thing long until you get confirmation, in my book. And I'm very careful about the financials in this case. Okay, that'll do it for today's video. I'll be back with you guys again tomorrow. See you then. Bye.